What's going on, chat? Shiva, Butler, boy. How's everyone doing? Stock reps, the man himself. How do we go this week, chat? How was your week? What's going on, Rhino? Andres? Vilpoo, what's going on? Young boy. Aki, Jaden, how we go this week? Bro, this week we just went down. Actually crazy conditions. Straight from Monday from the get-go. For those that missed it, I'll put a breakdown from Monday, from the setup I took. So if you want to check that out, that ended up being the top of the move, by the way. So if you want to find some value on that, you can go check it out. We're not covering that in today's masterclass. That was on Monday. Mr. Lungless, what's going on? Abdel, T, what's going on? Love you too, Matt. Kryptonized, what's going on, Dylan? What's up, Joshua? Pretty good week on the charts, to be honest. I'd hope so. Like, realistically, you can just press short like a monkey and fucking still get away with it, you know? What's going on, TFS? Up 15R and learned and refined so much. You know what? That's the important part. Copping a 10K tonight. Pretty sure we've spoken about this, but I'm pretty sure you've collected data before. Like, you've got your stuff proper. Covenant, what's going on? Up 28R, so I reckon it was right. Well, why do you guys fucking do that, bro? 28R is like... that's a lot. That's amazing. What's going on, Maddie? What's going on, Danny? Week was mint, came back from 8% drawdown to 2% on the 50K challenge. Nice, bro. That's fucking huge. Saved yourself $300 there from having to buy another one. Got my record week, 24 risk to reward. Nice. That's just showing me that there's growth, so it's good to see. Midweek, bro, learning every day and started getting out of drawdown. That's alright, bro. You know, hopefully I can you know, show you what's good on Thursday and Friday at least. Got my first forward test, hit break even. That's alright, bro. Just start pumping them out. As soon as you see something that meets your system, forward test it, add it to the data bank. 10 risk to reward on the forward test, but made some really stupid mistakes. As long as you're conscious and aware of those mistakes, that's what matters. I make mistakes all the time too, but as long as you reflect on it and you acknowledge where you went wrong, that's the best thing we can do. What's going on, Ray? Ben, what's going on? What's up, Covenant? What's going on, Kevin? Alex? I'm in the gym, slowly getting back. That's good, bro. Good to hear. Happy to hear that, bro. I was in the gym today too. Fucking putting in the work, bro, so can't complain. What's going on, Daniel? 12 risk to reward, only trading in London. Nice, bro. Pretty sure all week it was just all great conditions the whole week, every single session, so at least for AED it was there. Price action was really good this week. Felt like I was reading continuations pretty well. Today would have been very easy. This week would have been very easy to read it. Like if you had the bias right and the external factors right. In other words, if you were looking for shorts this week because you came to that conclusion because of your bias and the external factors, you would have had a pretty good week. On what days do we have the live streams? Still Sunday, but I'm going to church tomorrow and I might start going to church in the evening every Sunday, so I might have to change it, but I'll keep you guys posted on that one. Up 5.18 risk to reward this week, my first week for testing your models. Nice. I'm hoping you got the data bank as well, Maddie, and you're collecting data on it. You're not just forward testing for no reason. When was my last L week? Well, to be honest, I think because I've only traded like twice or 3 times on my personal to secure a green month. I wouldn't say. I'd probably say when I was taking a lot more trades before I started, dropping it off and being more focused on less is more, which is what I've been doing for the last 3 or 4 months. So maybe 5 months ago, if you want to go by the book on the personal account, because you've seen my track record and how spotless it is for my personal. Doing calf raises while watching a stream. That's one way to do it, bro. Like that. Saturday Masterclass fat. Saturday Masterclass because we're going to church tomorrow, brother. What's going on, Kyle? Mike, what's going on? Got so many good forward tests. Sure. Okay, so seems like most people did pretty well this week. I'm still going to go through shit. So maybe if you did miss what I'm about to show you, you can add it into your data bank if it fits your criteria. So we'll go straight into it. So basically from here, we went and had our correction, right? Obviously the correction started before the week started, right? So having our correction. Now we look, one thing here, I pointed it out in the last live stream on Wednesday. If anyone can you show seconds entry? There's a channel for that. Got 2 channels for that actually. Anyway, if you remember from the live stream on Wednesday, I highlighted that there was no valid zone over here, right? So I had no valid zone over here, but all I was viewing this as was liquidity, right? On the Wednesday, my original bias was for shorts to come down and head down all the way here, right? Obviously that didn't materialize until later in the week, but obviously it ended up getting run. All this liquidity ended up getting swept. And there's not really a valid zone here for me to justify price reacting off here and then, pushing up, right? Maybe something like this where it's a clear cut demand zone, although it is mitigated. I prefer something like this compared to something like this where this just looks like trendline liquidity generated and then obviously run. Yeah, so with that in mind, price heading towards all this trendline liquidity on the higher time frame. That was pretty much the bias that I had in mind, yeah. And obviously on Monday I went through this particular setup over here, how I went about it, but we'll get straight into it. So this is basically what our week looked like, right? Pretty much what our week looked like. Now, going from Thursday and Friday, order flow stayed bearish the entire time. There is not one protected low based off my criteria here. Sorry, there's not one protected high based off my criteria here on the 15-minute or 30-minute. That gets taken out. The whole time, all protected highs are being respected all the way through. There's no... You could take longs maybe on the counter trend, like small counter trend longs over here, but as far as the counter trend goes, it's going to be a counter trend and it's just going to be a pullback to head down lower, right? So, Thursday rolls around. Jump into the 15-minute. And price is just continuing to go down. Order flow is bearish. Trending conditions. This is where we're supposed to thrive. Now, it makes it a little bit harder for a target because we don't know exactly where to target on the high time frame, right? So we're going to be conservative with this masterclass and we're going to be realistic. We're just going to be targeting weak lows. That's it. Nothing crazy, right? So Thursday rolls around over here, right? Thursday the 25th. Now, price is still bearish at this point, right? We have 15-minute structure, internal protected high. Now, in terms of Thursday coming around, Thursday hits right here, and it's actually happened quite a few times where price likes to react off some form of high time frame zone on a Thursday as soon as it hits. And that's no different from here. So we're starting from Thursday, right? So we're over here on this candle. Now, we look over here, have a look where price has reacted from. Quite clearly, it's over here. Now, to be fair and not to be cheating, because it did tap into that zone at like 11:45 on a Wednesday, right? And it only turned over to Thursday at this point, right? So let's say that we miss out on the high time frame move, right? That's fine. How many times have we still gotten, price give us a setup? And we've got to look at it from both ways. We still have the bullish structure over here, 1 minute break structure, 1 minute protected low. Now, at this point, we reacted off this 15-minute supply. However, we failed to take out our protected low over here. And now, people with a bullish external factor view will see this as a potential long, right? Now, you could view it as that. And again, have a look at your 3 minute, have a look at your 1 minute. We're looking for the best possible setups, all right? Now, I see a few zones of interest, right? We have this supply POI over here, and we can drag that across. Now, when we're coming off high time frame zones like this, it's important to keep in mind that realistically we could continue up, we could continue down. It just depends on what order flow is doing. So, off the 15-minute, this is still on Wednesday, so we're not taking any setups here, but hypothetically, let's say someone did take it off here, and then we push back up. But then we respect this zone over here, okay? Now, if we're respecting this zone over here on the 3 minute, that's showing us that bearish order flow is continuing over here, right? Because we're failing to take the high. We're respecting supply because we have this bearish setup over here. Now, let's say you take it off here, 4 pip stop loss covers the protected high, and you're just looking to target the weak low. That's it, right? Like we said, targeting the weak low. That's all we're gonna do. Because we're in such a big downtrend here, there's not really a whole lot we can target. Like obviously we're in hindsight right now, we can put the take profit target all the way to the lows of the week, but we don't know that in real time. We don't know how much price is going to drop. So we're just going to be conservative and take what's there. Okay? Like I said before, targeting weak lows. First trade comes in. We end up hitting that weak low. Price doesn't break the weak low. We come back up and we don't put in a new high here. This is not a full body break above. This is not a break structure for me. It needs to be a full body close above. So realistically, what this is showing me is we have this 3 minutes still over here. And all it looks like to me, right, at least the way I'm viewing it, is a deeper mitigation. So the initial mitigation, for those that don't know what initial means, it means first. The initial mitigation becomes liquidity for the deeper one. So we sweep the original high. And now we actually get another setup over here. So taking advantage of bearish order flow at this point, again, we could potentially look for a 2 pip here because it's still covering protected structure. and we can look to target the low. So that goes for a 1 to 6. And again, just targeting the weak lows. That's all we're doing, being conservative, right? And remember, reason why I'm favoring shorts in the first place is because our 15 minute is still bearish. Our external factors are still bearish, so I'm not going to be looking for counter trend, longs until 15 minute shifts. There's no point in that. So obviously that ends up getting run. We start getting new structure to the downside, and the process will repeat itself for quite a while because these are ideal trending conditions, right? And again, cycle between the 1 minute and 3 minute to find the best possible zone, right? And look, see how there wasn't a zone on the 1 minute and now there's one on the 3 minute? This is just simple etiquette. Cycling your time frames. If you don't cycle your time frames, you could miss out on the move. In terms of the entry confluence, if you want to consider this inducement, you can. Or you can use the imbalance over here, whichever, right? So we go back into the 3 minute, into the 1 minute once again. And we see price it didn't reach the zone yet. So you'd have a better chance of spotting it coming into the 3 minute if you had that marked up. Now, in terms of this zone over here, no imbalance or inducement, so that doesn't fit our criteria, for those who are wondering. So automatically you'd be like, okay, that zone doesn't really make sense, doesn't fit my criteria, at least my criteria anyway. And then obviously in that 3 minute we have this. Now it's up to you what you want to do. I would still opt for the 4 pip over here just to cover protected structure. Although it won't give you the most risk to reward, you can get a 1 to 2 at least. And obviously price will float around for a bit and it'll hit break even, and it'll hit take profit over here at the week low. So again, just staying conservative, nothing too crazy, just taking advantage of order flow. And if you feel like price is going to reverse, and you're like, okay, wow, it's dropped so much, just target the week low. Be conservative, that's all you gotta do. And again, we have a look at the 1 minute and 3 minute. We get another structure break. And we're just taking advantage of order flow once again, right? So we have that structure break on the 1 minute. On the 3 minute, doesn't really look like there's anything there. And sometimes it'll be like that. You look on the 3 minute and the 1 minute, and sometimes the best zone will be on the 1 minute. So again, just looks like liquidity right here. Trendline liquidity being generated, obviously that gets swept, and that becomes inducement for our zone over here. Pretty easy to spot once you've taken data on it a lot of times, and you've got that market experience. So price comes in, taps into that 1 minute over here, and again, respecting the protected high, internal break structure, high probability zone as well because it's an engulfing zone. It's got the inducement and it's got the imbalance, right? So it's a very nice zone for us to actually consider. Happy to go with it. Everything else, would consider it more of trendline liquidity being generated here. In terms of your stop loss, would most likely go for the 4 pip over here just to be safe because we're not at protected structure. And we'll target the week low for 2.25 once again. So we're just chipping away here. We're not going for anything too crazy because we don't know where price is actually going to flatten out, right? And obviously this hits over here. We head into the next day, into Asia. And then we get this. Another structure break. Again, order flow is still bearish. All protected highs are being respected. Price is continuing down lower. No surprises here, right? All we have to do is just short. We look into the 3 minute now. Price has reacted off imbalance over here. I believe it's a little bit easier to spot it on the 1 minute, but price just comes off the imbalance and continues down lower. Now, depends how you want to look at this, because we can leave this out, it's up to you guys, but it just depends, right? Because obviously we do have some form of inducement over here, and we do get our imbalance entry model, right? So we do get it there. At least a 4 pip, so we can cover the imbalance, and if we went for a 2 pip, it might be cutting it very, very close, right? So that's also part of the reason on the risk management side of things why I don't like running a tight stop loss when we're not covering anything. If we're covering at least the zone or the protected structure or something, it gives the trade a chance to breathe. And that's just following my rules, right? I'm just following the rules that I teach you guys in this example. So we can run that down for 2.6 off the imbalance, get that imbalance entry model. And obviously price does give us confirmation off the imbalance, right? Seconds over here. We don't move to break even until we get structure break. So just depends where your structure break might be. Maybe if you want to do it off here. If you did do it off here, then you might get a re-entry criteria. So let's say that we do come back to break even over here. Let's be fair. And then we see prices respecting, deeper mitigation from the looks of it. We get another entry. We don't move to break even because we don't have a structure break over here. So at this point, we just run it for a 2.6. So we do get a break even over here, following a normal break even criteria. I probably would have moved to break even over here because it's a high probability setup in my eyes. Then we do get a re-entry criteria where price respects the original setup. We just get a deeper mitigation and we can take that. Continuing on, 12 o'clock on the day. Next visible structure is over here, internal break structure. And again, just taking advantage of order flow. All protected highs are being respected, right? All protected highs are being respected. There's no point in looking for longs until we have visible confirmation that a protected structure is getting taken out on the lower time frame, and then the 15 minute and the 30 minute, right? And we can just see it's being respected the whole time. It doesn't matter how you feel, oh, let me wait for longs. Okay, I can't wait for the longs. It's gonna be so good. Like this. You're getting good conditions in front of you, but you're waiting for price to reverse. Like you're getting the ideal conditions right in front of you, but your feelings, you feel like price is going to reverse on you. Again, on the 1 minute, there wasn't really anything over there. We have a look onto a 3 minute. And price does give us something on the 3 minute here. So we can see internal break structure, protected high. We have this supply POY over here. So that's something we can end up using. And it does have some form of inducement over here that does get swept. So there's some form of sweep going onto there. Then we have a 4 pip stop loss works well. And look, even if you're not getting the most risk to reward out of it, like I said, sometimes it might look like this, especially when the zones are bigger and you can't really refine them. It is what it is, right? But you wouldn't move to break even until a structure break. Obviously price comes back up into drawdown. We're not at break even, and obviously we get to take profit. So that goes for a 1.38. And then we get another structure break. So we're still continuing down. We're still having that bearish order flow, right? All you have to do is just take advantage of order flow. That's it. You don't have to predict, wait for a reversal. Like why? Reversals are just lower probability in general as well. Why wait for a low probability model when the fucking high probability one's right in front of you? So we get the 3 minute structure break after we hit that 1.38. And now this is probably my favorite setup of them all because the inducement's very beautiful on this one. On the 3 minute it looks better because it just looks like one leg down for me. Have a nice clear cut internal protected high. Get that 3 minute inducement over here, sweep these highs. And it's clear that it's an inducement, right? Because we failed to take this low over here, right? This high failed to take the lows. We're not getting new lows. So this is a weak high. Weak high gets targeted and ultimately swept, right? So we ultimately sweep that. Let's say we're going for what would be, well, has to be a 4 pip stop loss here, so we can at least cover the zone. And then we can look to target over here for a 1 to 2, right? So obviously clear cut zone on the 3 minute has the inducement, right? Some of you might be looking, oh, what about this zone over here? It doesn't have any fucking inducement or imbalance. Get a good fucking criteria, please. Filter out bad zones. Like I've done masterclasses on this shit. You guys should already know how to do it. No imbalance, no inducement. It's not for me. So that goes for a 1 to 2. And again, another structure break. We're just continuing the bearish order flow all throughout all sessions of the day. Doesn't matter. There's no discrimination here. Now, another protected high, respected once again. Now, 3 minute over here. Potential zone over here has the imbalance, but price just runs straight through, right? Most likely no confirmation on this one, right? Now this one, obviously we do get some form of confirmation off this one. And it does have some imbalance right under it, right here. So we do have an entry confluence there for that zone. In terms of the stop loss, up to you what you want to go with this one. I mean, you could go for it. I'd stick to what I'm showing you guys, 4 pip stop loss, and looking to target weak structure over here. Again, once again, weak low. You don't know where to target a weak low without fail. So then we get another structure break. And then we get another one over here, internal one. Now to me, this just looks like fucking liquidity because of all the fucking wicks. But anyway, let's say that you did take it off the weak high over here. Sorry, off the protected structure. So that you did take that, you go for a 2 pip on that one. Looking to target the weak low. Now, if price is struggling, because price is only going to do one of two things when we go into a weak low. We're either going to break it and put in a new low, or price is going to shift and we're going to respect the weak low. Now, it depends on how you guys adjust and react. Because of how far we've dropped already, actually news comes in right here. Okay, cool. So that changes it. So the thought process with this, we're 1 hour from news at this point over here. We're 1 hour from news, right? And we're seeing prices starting to push up once again. We're failing to take this low. Prices starting to push up. At this point, realistically, I'm gonna get out and take what I can get because news is just around the corner. Most likely there'll be some setups afterwards, right? After the high impact news. You guys already know how I go about it. So internal break structure, protected high. At this point, when we're down here, take into consideration, like everybody's plan is different, everyone's system is different. I can only explain what I would do in this situation. But seeing that we're failing to take this internal low, and then we're pushing back up. So like I closed it just a little bit higher up because realistically, if you're seeing the price come back up again after failing to take the low, and you got news in an hour, what's the point of holding it? I'll just take what I can get and then I'll hop out. All right. even if I get out just a tiny bit later, at a 1 to 2, like price is already giving us a full candle up. That's cool. I'll take what I can get. So obviously news rolls around. Now at this point, this is where price initiates some form of pullback. Okay? So, hopping back into a high time frame over here. Where are we at? Okay. Onto the 15 minute. So price is pretty congested over here, right? Let me do this. So it just realistically just looks like one leg over here. To me, this just looks like one leg. And it just looks like the structure breaks over here. The protected high is over here. Anything below this protected high in the 30 minute and 15 minute is still bearish. So keeping that in mind for your external factors, right? We're still bearish below that protected structure. Now, obviously news hits, low time from order flow shifts bullish. Why aren't we considering this zone? I mean, you could consider it for a fail breaker structure, right? Because you've got this structure break here and you got that structure break there. So let's say that you do try to take it, right? Fail break structure, we go from here. We've got the inducement over here, equal highs get swept. Cool, it still suits our plan. We're still happy to take it. So we go over here and then let's say that we look to target the lows. Obviously that ends up being taken out. So that ends up being the first loss, the first valid loss, right? But now we have confirmation that order flow is completely shifted and now we're bullish once again, right? So, obviously we're bullish. Price puts in a new high on the lower time frame. Adjusting and reacting because now it's clear that the lower time frame, at least, even though the 15 minute and 30 minute is still bearish, our lower time frame is having some form of pullback. So now we have this. And now, we don't really play into a valid zone over here, but I like to consider this a protected low setup, right? Where we come close enough to the protected low, like obviously our stop loss is going to cover it, yeah? We don't have to sweep the protected low, but this is still a setup we can take. We can cover the protected low, go off that, and target the weak high. That comes out of the 1 to 8, right? And once again, structure continues bullish, right? Again, structure continues bullish. Have a look at our 3 minutes, have a look at our 1 minute. Alternate between the two so we can find the best and the most probable setup for us. So that was the setup that we just had over here. Now we get another 1 minute structure break over here. We get another one over here. So this one doesn't really pull back into anything meaningful. Now we get this one over here. Come back into demand. There's just a 3 minute demand. And realistically, there's imbalance over here. Like, price isn't confirming off any imbalance. Like, there's no trade to be taken. The only trade that's actually an option is coming off the 3 minute because price actually confirms off of there. Then we just go for a 1 to 4. Sorry, a 4 pip stop loss, target the weak high. And that ends up getting run for 2.72. And now we do get another structure break over here in the 3 minute. Again, just taking advantage of order flow. Realistically, if price comes back, I mean, just drop straight away, right? Drop straight away. Let's say that we got price confirming off of this demand zone over here because that's where we have this. This is where you might have gotten some confirmation. So we're just following the plan. 4 pip stop loss, targeting the weak high, and it's going to consolidate, it's going to come back up for a bit, and then we're going to get taken out. So now we're seeing that order flow is shifting bearish again, right? That's what's happening. And we have a look on the 15 minute to see what price has potentially reacted off. Doesn't really look like it's reacted off much, right? So we end up getting taken out of that. Price comes down. Now at this point, because price is having its pullback over here, although we have a protected high over here, right, and we have a potential setup, right, we do not get confirmation because price just goes all the way through past the protected high. Also, to keep in mind, the spread hour in like an hour or so, but as far as confirmation goes, there is no secondary confirmation on here. We just blitz right through and close above the protected high, so no setup here. So we continue on. Now this is spread hour heading into Asia once again, and order flow is bullish, right? First valid structure I can see with my eyes is this right here. Protected low, internal break structure. Like realistically, there's no, like this just looks like one leg to me. At least this has a decent pullback, big enough that I can see with my own eyes. And it looks like price comes off this. So what we call this type of demand zone is a sell to buy. Now let's say that in this case, you saw it a little bit late because you were anticipating that price was going to come into the protected low. It's not the end of the world, right? Still would have taken a setup, even if it's a little bit late. You know, you could still cover the protected low. Probably not going to get the most risk to reward out of this, but targeting the week high, at least you can get a 1 to 7. Sorry, a 1 to 1.7, sorry. And it just comes off the sell to buy. Now, is the sell to buy still valid? Yeah, because it has imbalance over here. So price still confirmed off a valid zone. It just wasn't a random zone. Still confirmed off that, right? Obviously, price isn't, I mean, this is too high up in the leg for me to consider. My high probability zones are at the protected structure or close enough to it, which is obviously what we got here. Now, price continues up higher once again. Depending on how you want to draw the structure break, you can go from here, or you can use this internal structure break for the setup. Either way, it doesn't really matter because we don't get any new highs until we come back down, right? So we're using this internal protected low. Now this is just a straight internal protected low setup. Price just comes in, sweeps the protected low. And you can be a little bit, we can chop off some of that foreskin with the stop loss because we're covering the protected low. And we can just target the week high at this point because this high failed to put in a new low, so we can target that for a nice quick 2.3. So now we're heading into London once again. Now with something like this, when it's borderline like this, I do like to go into the 15-minute just to confirm what I'm looking at. And if I look at the 15-minute, this still looks somewhat solid to me, right? Because at least it looks like it's still a valid 15-minute setup, right? There's still a deeper mitigation, right? Initial mitigation is being swept and we're coming back down lower, right? So this is probably like one of the more trickier setups to actually spot. However, we still get structure breaks. We get 1 and 2. You guys know 2 structure breaks is a fail break structure if we do get that continuation. Actually, that's news, isn't it? Okay, so we're going to avoid that. Sorry, chat. That's news. 10:30, my bad. Okay. But just for reference, that would have been a fail break structure. Okay, cool. And then the market's there. Okay, cool. So obviously news comes in there. We end up putting in a new high. And you guys know any trades from Saturday morning onwards, I do not forward test because I'm not going to be trading it in the last couple of hours. So that ended up being the last setup of the day. Now, total of what we got for all our risk to reward from just following the plan, being extremely conservative because we're just targeting week highs and week lows. So we got 2.35 plus 1.75, and this is including losses and all that stuff as well. Minus 1 plus 2.72 plus 8.45. That one was a loss. Minus 1 plus 2 plus 4.26 plus 2. And this is extremely conservative, by the way. Plus 1.38 plus 2.6. That was a break even. Plus 2.25 plus 2 plus 6 plus 2.68. And that was it. So we got a grand total of 38.44 risk to reward on extremely conservative targets. Obviously, you could have looked onto the 4 hour, and maybe if you had an analysis or on the daily, and you're like, okay, my next potential valid zone would be over here, this demand zone over here. This all looks like liquidity. I'm gonna target all the way down here into this zone, and I'm pretty sure if anyone did that, they would have cleared over 100 risk to reward pretty easily. But I just wanted to have a realistic approach and just break down following order flow. And also keep in mind that if you're following order flow is bound to shift eventually, right? It's how the market works because we don't go in straight lines. So you're bound to get taken out of losses, but it's up to you how you adjust and react. A good example is this. Looking for shorts, short bias, and then adjusting and reacting, taking advantage of order flow. Looking to adopt by any chance? Yeah, maybe soon, brother. Maybe soon. Does that make sense, chat? Conservative approach with the losses, wins, and break-evens. And what's unique about this masterclass is there's not really any clear high time frame targets. So for those that struggle with targets, this should help. Every single time there's just been a protected high being respected. There's no reason to long unless we have protected lows. Right? There's no reason. Protected high, respected, protected high, respected again. Realistically with this, you probably shouldn't have been looking for it, but potential fail break structure could have continued down lower, right? So that is a valid loss in my opinion. But then it becomes pretty clear that we're now bullish. So now we have to adjust and react. Okay, now we're looking for longs. Eventually, the losses do come out, and sometimes you're not on the charts to catch all of these, and then you come on and you get the short end of the stick because you try to catch a fail break structure over here, you collect one piece of data over here, and then you're like, I fucking lost, let me get off for the day. And then you're pissed because you just came in at the wrong time. That's why you just got to collect data, because then you can acknowledge that, okay, this is bound to happen. This is a normal part of the market where order flow eventually has to shift. Sometimes you don't know when it's going to shift, and that setup that you're in could be the end of it. Could be the end of the trend before it shifts. And this is a good example of it right here. But it eventually becomes clear, if you are wrong, that order flow shifting now. Now we can look for the longs, right? So I hope fucking something today clicked with you guys, even though most of you guys did have a good week. I hope, for the people that didn't have a good week, maybe you got in at the end of the trend. Like, yes, we are low on the leg over here, but we are, taught to follow order flow, but can't win them all. And this is a perfect example of it. Price will treat you very nicely all the way down, but eventually it's going to come back. And that's probably where the hesitation comes from. If you were out of the market most of the day, you probably, psychology-wise, you're probably coming in and thinking like, oh shit, it's dropped a lot. I don't know if I should keep shorting it, but just keep going until it shifts. Don't be like, all right, market's going to reverse. I'm going to catch the biggest long ever. 15-minute and 30-minute has been bearish the whole week. There's been no protected highs taken out. There's clear evidence right there that we've just been bearish, and there is no longs on the horizon until that 15-minute and 30-minute shifts. Thanks, stock reps. There's a channel in the Discord, bro. Shiver. Could you not target a 15-minute week high during those longs? You could, but I wanted to stay consistent in this masterclass, and because of how rapidly price dropped, I wanted to have an emphasis on the lower time frame week highs and week lows, because that was the case for most of it. That's good, bro. I'm happy, bro. Wayne Day, something clicked. For high time frame bias, I use breaker structure as confidence to see where the market is moving. It's up. I mean, it could be enough for you, but I'd recommend just having a look at the simplified external factors masterclass, so you can just see if maybe you could take something else to add to it. I need to forward test those bias. Look, again, most of the demand zones and the supply zones are just POIs, and then you got protected structure. That's the ones that usually play out. Realistically, there were only like one or two sell to buy or buy to sell zones, but I still think you just need you could easily just be profitable like your protected structure and your supply and demand. But yeah, it's pretty easy to get frustrated in the market when you when you look in the chat, everyone's ripped out all these continuations, and then you get on here late at night, 10 o'clock, and then you get taken out here. I mean, trend eventually has to end, right? And if you actually review the price action and you see how many opportunities there were, and the only issue was that you weren't on the charts and you just got a systematic loss over here, because eventually price has to shift with order flow and do a correction. That's just how it is. Can you show how to get I don't even know what kind of question this is. Just go here, 4 pip, drag it to 4. That's how you do it. I mean, I thought they taught this shit in school, but that's what it looks like. That's what a 4 pip stop loss looks like. Alright, anyway. Where do you set your break even at? The zone to cover your entry or cover your comms? No, always at my entry. Can you go over the whole 15-minute external? There's not really much structure here, bro, on the 15-minute and 30-minute. All just internal breaks. Internal, 30-minute, 30-minute. 30 minute, 30 minute, 30 minute. It's all just internal breaks, bro. There's not really much to look at because prices expanded so quick on the lower time frame that you don't really get much structure to look at. Because sometimes it says 24. For me, it says 4. I don't know what you've been doing, bro, but for me, it just says 4. 24 is a pretty big difference from 4. Alright, let me go through the outlooks of the week. Let's go into Hoanda maybe. Alright, it's a little bit better. Okay, cool. So last bearish structure break was over here. On the 30 minute, that'll be clearer. Right, pretty clear cut. Protected high over here. Where we need to look at is, are we going to put in a new low over here? And looks like we might. However, order flow is bullish over here. That looks like it's just to fulfill the correction because we're still within the bearish structure over here. So I wouldn't be surprised if we, if we do respect the protected low over here and we continue up higher. That's to fulfill a correction. So I guess this is more immediate. If we break the highs, we'll continue up higher for the correction. If not, then we'll continue down lower, and then there will be a weak low we can target. So that's a thought process for the for that. The DXY last week we were pretty on the money. No full close above, so it looks like there is a weak low over here. That just depends on the 15-minute order flow, 30-minute. And it just looks sideways to me. So, I mean, look, technically it's bearish. Technically, right? Technically. And you got the protected structure over here. So technically it is bearish. I guess we'll just have an alert up here. And if price does continue to break down, then we'll have one over here. Brokers are also trying to force clients into high forwards, including most likely price will drop further. It's not looking good till the election, yeah. That's probably going to be the case. Alright, chat. So I guess we'll wrap it up. 38.44 risk to reward on a very, 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 very conservative approach with 1 to 2s and 1 to 1s and 1 to 3s and 1 to 4s. So hopefully it did make sense to you guys. And yeah, so hopefully you guys did enjoy it. You learned a couple things. And also, troubleshooting points in the market where you get in at basically the end of the trend and you just leave that at 1-4 test further there. It's very lazy, so I would definitely collect more data because, like I said, need to understand how this shit works. Is the trade from 22.52 candle valid? $22.52. Where the fuck's that? 52. If you're talking about this one over here, actually looks better on the 3 minute. Right here. Comes into that 3 minute demand. Thank you, stock reps. Hopefully it's a good card. It looks like it's gonna be a good card. Thank you, Ray. Thank you, Lucky. Alright, boys. Pretty long masterclass, about an hour, but hopefully you learn a lot. I'll catch you boys on Wednesday. Enjoy the rest of your night, enjoy the rest of your morning, depending on where you are in the world. And I'll catch you boys in the next one. Thank you, McLovin. Appreciate you, bro. Alright, boys. Thank you, Daniel. Enjoy the rest of your day, alright?